Hey, it's Todd Alt. These are Wall Street words. Today's word is short seller, or to sell short a stock. Really simple definition here, but people get it confused all the time. Just imagine you sell something first before you buy it. So if you sell a stock short at $20, you want it to go down. If it goes down to $15, you buy it back, you make a $5 profit. However, selling stock short can be very dangerous. When a stock goes up in value, you have unlimited risk. But when you sell it short at 20, it can only go to 0. When you sell it short at 20, it can go up unlimited. Now, in theory, that's unlimited risk when you're short selling stock. And you have to go to a broker to borrow that stock because you have to own it or borrow it first to sell it. You sell it first, you buy it back later, you're betting on the price of the stock going down. There are many reasons why people sell stock short. There's hedging reasons why they can sell stock short. They're long something else. They're long a different sort of security. Or they could just be betting that the company's gonna blow up or not do as well. Short selling is a very important part of the capital markets and done all the time, generally by professional investors. But those of you who are not professional investors, prepare to get your head cut off one day. I'll give you an example. I was short Amazon many years ago, and in one single day, that stock went up $100 a share. That was a $400,000 loss for me and a very valuable lesson. Selling short or short selling, that's the word of the day. Hey, thanks for watching Wall Street Words. New words and terms delivered every single day. Please subscribe, push the bell. If you found this information helpful or you think someone could benefit from this information, please share this video. Thanks for watching our channel. Always good things happening here.